Hey everybody, Chuck Barone. It is Friday, December the 8th, 2023. Crazy day, crazy week. Let's wrap it up. It's I don't know. Sometimes words elude me with the crazy we're seeing in front of our very eyes. Before I get rolling though, let me take a half a second. Welcome everybody to the show. And as always, thank you guys for your support. We appreciate you guys watching these videos and staying with us. We appreciate you. All right, so let's talk about markets today. The most confusing, craziest thing I think I've ever seen. So we see the jobs report come. Here we go. And the jobs report comes in at 199,000. Now, interestingly, I'm going to talk about this a little more. They raised their expectations way higher. Right this morning, literally minutes before they announced. And now they're trying to downplay this jobs number like it's great news. And the market's saying, look, more evidence of a soft landing. Once the Fed starts cutting, we're going to be off and running. So the market's reacting accordingly. Mixed reactions. Stock market reacting one way, bond market reacting another. Check it out. So stock market, across the board, boom, takes off running. The Dow up 130 points, sitting at 36,247. The NASDAQ up 63 points, now at 14,403. And the S&P up 18 points, sits at 4,604. So broad gains across the board for the markets today. Everybody happy, markets feeling jovial, like, okay, man, the worst is over. We're going to keep on rallying. Okay, good news for the stock market, right? Now you look at the bond market. Now the bond market looked at this jobs report way differently than the stock market did. They looked at this like, these numbers are way too hot. The wage numbers was really high. Unemployment number coming down pretty dramatically. They're expecting it unchanged. So the bond market sells off like crazy, right? So you got the 10-year jumps 12 basis points, now at 4.25% on the 10-year. The 2-year jumps 13 basis points, now back up to 4.73%. So you were seeing these yields really come down. Bond market was like, okay, maybe this interest rate cut's going to happen. And that's how fast it changes. Remember I was saying yesterday was, wow, a nice calm day, right, in the bond market? Today, right back to crazy volatility. And I think, truthfully, the bond market is probably going to be a little more, a better indicator of where we're going, on rates at least, than the stock market's going to be. The stock market looking at a whole bunch of additional factors, earnings and other things. So it's amazing how the same set of data can have different effects on these different markets like this, right? The dollar today up small, but sitting at 103.99, so basically right back on the cusp of 104. A decent number for the dollar. And as a result, man, look at gold and silver today. Gold comes down $24 an ounce. Now barely hanging on, sitting at $2,004.10 per ounce. Barely hovering above that 2,000 number. Silver comes down 82 cents. $22.97 for an ounce of silver. So, gold and silver had been rallying, and that rally is getting blown up pretty hard. Oil today up $2.02, now at $71.36, right where we expect it to be, between 70 and 75. That's where it's going to stay for a while. OPEC, I was reading an interesting article today saying OPEC losing control of the oil pricing game. They've tried their tricks with their buddies in Russia to prop prices up. It spiked for a second there, but came right back down. So oil sitting exactly where we believe it should be sitting. And Bitcoin today, man, Bitcoin jumps another $1,000, $1,030. Now sitting at 44,388. Here we go, man. I think this rally looks like it's got some legs. If you're holding Bitcoin, you're probably smiling pretty good. If you're not, you're probably kicking yourself a little bit because this could have been had just a short time ago for about $16,000. Pretty significant jump from there. So Bitcoin rocking and rolling, man. And I'm reading good things about it. Barone's is really bullish. So interesting things. We'll keep an eye on this for all of you guys. So the markets today are a real mixed bag, man. The Bitcoin and the Dow and the stock market rocking and rolling. Dollar, bonds, precious metals tanking, and oil up. Weird day, man. Very, very strange finish to a very strange week. If you only looked at the stock market today, you would think, wow, Wall Street had a pretty good day today. If you look at the whole big picture like we just did, you can see that the stocks, the market results in stocks today were the anomaly. Everything else was kind of negative. All right, so let's talk about why. Okay, so today we got the jobs report. They call it the non-farm payrolls report, coming in at 199,000 for the month of November. Now, you'll remember yesterday I talked about this and was saying that this is going to be a huge event. I was saying that they expected 140,000. I was saying that anywhere between 75 and 150,000 is the sweet spot they're looking for. So 199,000 is not good news. It's still way too hot. But here was the interesting thing. So I'm watching the Bloomberg this morning and waiting for the numbers to come up. And right before they announced the number, the 199,000, all the expectations for that number were coming in at 190,000. Oh, the market, Dow Jones expecting this, beep, beep, beep. You know what? Bullshit. I was reading this yesterday. None of these companies were doing that. Now they want to make it, well, look, we were right on the money. What a load of crap, man. Okay? Now, this is a wrench in the gears of the rate cut crowd. Because let's face it, guys, jobs are still going good. And the wage increase that came with it, 0.4%. So just under 5% year over year. It stayed at this level. They said that the gain in wages remained unchanged at 4% year over year. What a freaking load, man. They just think we're idiots, man. It drives me crazy. But it looks to me like maybe this deal's a done deal already. The Fed's going to start cutting rates regardless of where inflation and inflation indicators are. It's crazy, man. So the stock market, looking at this number like it's great, unemployment number falls from 3.9 to 3.7. Wow. So this is not a neutral job report. This is pretty hot. Wages climbing pretty dramatically, right? And they're still trying to play it down like this is all blah, blah, blah. What you're hearing now is more evidence of a soft landing. I got to tell you, I got to believe this soft landing when I see it with my eyes, because the theory has never actually happened, right? So blah, 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 they're talking. Sounds like the goose is cooked. They want to move to rate cuts. Obviously, they see this recession coming. They're seeing the same data we are. They're seeing it way before we are. So here we have it, man. Crazy times. Then you get the University of Michigan coming out today, and their index just rockets up. Last month was sitting at 61.3. Consumers feeling not very bullish about the economy. This month comes in 69.4. Bam, a huge jump. All of a sudden, consumers feeling great. 13% spike in consumer sentiment. Everybody feeling chipper, like this inflation fight is won. I guess that's the power of media, right? Now, they're just going to bullshit you into believing this. I guess you're going to believe them over your own lying eyes. I'm not going to do it, though, man. I still see, grocery costs from 2020 to today are up 25%. Rents are up 20%. They're not coming down. They're just they're trying to cheer us up by saying, well, good news, it's only going to, it's only going up by 4% a year now, or 3%. Bull, man. Enough's enough with it, okay, guys? We know what we're supposed to be doing. We listen to this, we can laugh at it. It's more like a friggin' comedy routine if it wasn't such a tragedy. And here we have it. So, the University of Michigan flying up today. Inflation, the consumers believing this inflation fight is won. They now see inflation in the 2s over the next 5 years, rather than almost over, I think it was around 4% last month. Consumers maybe feeling, I don't know, are you feeling like super good about the economy? Are you feeling like super good about your own personal finances? About, because I'm reading that, savings are collapsing, gigantic numbers of people can't pay for an emergency expense, debt levels going through the roof, passing $1 trillion in credit card debt, delinquencies on credit cards and car payments starting to rise. That's always the first sign of a recession. I got to say, I'm feeling a little more bearish than apparently the sentiment in the market is, right? Now remember, guys, next week, the Federal Reserve is going to meet. It's pretty much a 100% consensus that they're going to leave rates unchanged and they're not going to do anything else. I think that's too bad. I think they could really jolt this market a little bit by raising another quarter and letting them know they're serious. But I don't really believe that's going to happen. If I was Fed chair, I certainly would be talking about it. This was a fascinating thing. I was reading, and I've been complaining about this greedflation and how greedy-ass companies are just taking advantage of the inflationary situation we're in right now to gouge consumers and raise their prices way, way, way higher than their costs are going. Well, now, guess what? Studies are being done, and guess what? There's no fiction to it. Greedy corporations are fueling this high inflation, making it much higher than it needs to be by raising prices dramatically higher than their own costs are going up. Now here, listen to this, guys. They were naming some specific sectors. Namely, the big ones are oil and gas companies, huge gougers. Listen to this. Exxon, in 2019, made $14 billion in profits. A pretty frickin' good year, $14 billion. 2022, their profit was $56 billion. Wow. Okay. Now, they're not really selling that much more oil. So this is just gouging the shit out of everybody. They named Shell. They named Chevron. They named these companies. They also naming commodity companies, food companies. Heinz Kraft is a big one. The survey showed that almost 20% of the inflation came from this greedflation. Company profit margins, record levels, that's across the board. And these companies just taking advantage of us because they can, for their own personal enrichment. It's a sad situation, guys. It really is, man. Today we had Larry Summers out warning the Fed not to be cutting rates too soon. They need to see, well, the word he used was overwhelming evidence that inflation is coming back down toward target or the economy is rolling over. He said he sees really neither right now. I thought that was interesting. Another interesting thing today, I read that October was the first fiscal month for the United States. They run from October 1 till the end of September fiscally. The first month of their new fiscal year, they had to spend $88.9 billion just in interest on debt. $88.9 billion in 1 month. They only spent $83 billion on the military. We know the military consumes about a quarter to a third of our annual budget. Now, interest payments higher than even what they're paying for defense. I'm sure that's going to end well. Anyway, guys, that's it. Let's get out of here for the weekend. Let's get away from these crazy markets and the crazy freaking world we're living in. Get out there and relax. Enjoy your time. Spend some time with your families, your friends, doing stuff you enjoy. I know I'll be sitting in front of my boob tube on Sunday watching the Bills take on the Chiefs. It's going to be a great game. The Bills really need a win, guys. Go Bills. Anyway, back on Monday. Hopefully a week where we'll have a little more answers than confusion. Doubtful, but we can always hope. Have a great weekend, everybody. Until Monday, then, take care. Thanks.